you know what, the last 20 years, if you know enough economics, you're going to make some money. Okay, if you could guess the next non-farm payroll number within, I don't know, 50,000, you're going to be a rich man. But in the last few years, it is very clear. If you don't understand politics, I don't care how much economics you know, you are destined to lose money.
It is my great pleasure to be joined by David Wu, the founder and CEO of David Wu Unbound, and a former executive at Bank of America as well. David Wu, a warm welcome to this interview.
Hi, Andreas. Thanks for having me.
I mean, what a timing to discuss what's going on in Taiwan and China, given the recent visit of Nancy Pelosi to namely Taiwan. First of all, this visit by Nancy Pelosi, do you think that's a part of a bigger strategy from the White House in relation to Taiwan?
I personally think it is, actually, because, you know, I know that the Biden administration has tried to distance itself from her visit. You know, you had Anthony Blinken's coming out saying that the decision was hers, that, you know, she represents the independent branch of the government. But the bottom line is this, okay? If Biden had thought it was a bad idea, he could have called her, okay, to talk her out of it. We now know from Thomas Friedman's article in the New York Times a couple of days ago that he didn't even try. So from that point of view, I think it's very clear that she went, I think she went with broad support in general. And I think there is something more to it. I think to the extent that I think, you know, I don't think it's a coincidence that the same week that she's in Taiwan, Congress actually today, okay, the Senate Foreign Relations Committee is going to be actually voting on a new piece of legislation, okay, that will significantly increase U.S. actually military aid to Taiwan, that will essentially, you know, promote Taiwan's involvement in international organization, that would even apply sanctions against China if China were to even basically raise its fist towards Taiwan. So I think from that point of view, none of this, I think, is likely to be coincidence. I think to the extent that I think it's very clear, and I've been saying this for a while, that that what's happened in Ukraine, between Russia and Ukraine, it's just a dress rehearsal of the bigger, basically, Cold War that's going to be unfolding between U.S. and China. And there's no doubt in my mind that this administration in Washington, you know, have proved to be very reckless. I mean, to the extent that it just keeps pushing and pushing and pushing, as though that basically provocation has no consequences. And I think we're talking about money here and investing. At the end of the day, this channel promotes investing. I think what the viewers need to understand is something very simple, which is, you know what? I've been doing this for a very long time, okay? I started my career at the International Monetary Fund in the 90s. You know, I worked in London, in New York for the last 20 years. You know, my last job, I ran the #1 ranked research team on Wall Street for macro strategy. I can tell you, I've never seen, you know, a year like this year. And what do I mean by that? In the past, when things go wrong, you can always expect, okay, politicians or policymakers to ultimately come to reason and throw the market a lifeline because, you know, certainly through my entire career, okay, economics was the most important objective for politicians in practically every country, at least in democratic, basically, countries. Okay. This is the first time I've seen that politicians don't give a damn about economics, that they, in their pursuit of their political objective or their geopolitical objective, okay? And that started with the war on Russia. There is no doubt that Biden, by declaring total war against Russia, has done more damage to the U.S. and the West than it's done to basically Russia. And I've argued that frequently in my videos on my YouTube channel if you want to watch. And then, so there is no doubt, the fact that they're even still at it is shocking. So from that point of view, that is the one thing I learned in 2022 as a strategist. So I don't want to make that same mistake again in terms of not believing that, you know, the U.S. will risk war with Russia by doing what it did. So from that point of view, when I see what's happening in Taiwan, okay, all I see is a government that's capable of basically putting its political priority in front of its economic priority, even as the economy basically approaches the next recession. And I think that, for me, is the biggest takeaway here.
Given that, David, when you watch the developments in Taiwan, first of all, would you expect an escalation of the current situation? And secondly, who will escalate the situation, China or the U.S.?
Yeah, I think right now, I think this is the way you got to look at this, right? First of all, I think, listen, I grew up in Taiwan. I was born in the U.S., okay? I lived most of my life in the U.S., but I grew up in Taiwan, okay? My family still lives in Taiwan. I can tell you this is something very painful for me to see actually what's going on, because you know what? I'm an American, but I have my family, my roots in Taiwan. There is no question that, you know what? Taiwan is going to be the biggest loser, okay, in this conflict, to the extent that Ukraine has become the biggest loser in that conflict. Because all that's happening is the U.S. is keeping basically pumping more money and weapons, okay, into Ukraine so that the U.S. can fight to the last Ukrainian. Okay. You know what? It's pretty amazing that now that they're leaning on Zelensky possibly to strike up some kind of compromise with Putin, if a compromise with Putin is letting basically Putin keep Donbass and whatever, and for Ukraine to declare they will never join NATO, guess what? Zelensky could have gotten that 5 months ago without seeing 20% of his country completely destroyed, thousands are killed, and basically millions basically displaced. So I think the first thing we have to understand is this, okay, that if you look at what happened to Ukraine, is the complete disregard for what happens to the Ukraine, okay, from the point of view of U.S. and Europe. That is the most sad part of the story, okay, which is that, yeah, the Ukraine, we can fight to the last Ukrainian. Who cares? Because as long as the war is basically being fought in Ukraine. At the end of the day, that's the story. Now, so from that point of view, this is a very different thing, saying, oh, well, I'm going to send my soldier into the field, or that I'm going to be fighting on my own home turf. That is not what's happening in Ukraine. And that's not going to happen in Taiwan either. So from that point of view, countries are much more ready. You know what to say? Well, democracy, freedom. Do you know, actually, it's very funny. A recent survey out of Taiwan shows that only 30% of Taiwanese support independence. Okay. And only 5% of these 30% of people support independence immediately. Taiwan already enjoy de facto independence. Taiwan has democracy, right? I mean, this is like Taiwan has its own elected government. It doesn't make any decisions because what China says it wants. Taiwan has an elected government, enjoys vibrant democracy, and most people think that, they're happy with the status quo. So what is Nancy Pelosi doing in Taiwan? Except to provoke the Chinese. I mean, that's, and I told you before, I think, the calculation, again, I'm with it, what? The problem is that nobody really, this is not like economics, right? I've always said, the last 20 years, if you know enough economics, you're going to make some money, okay? If you could guess the next non-farm payroll number within, 50,000, you're going to be a rich man. But in the last few years, it is very clear. If you don't understand politics, I don't care how much economics you know, you are destined to lose money. Okay? Now, there is no doubt. If I look at the tea leaves on the table, I see a lot of coincidence, right? I just told you. Like, it's amazing. Like, Pelosi visits Taiwan in the same week that the Senate, Foreign Relations Committee is going to pass a new Taiwan Policy Act that is going to piss the shit out of the Chinese. That will be seen as a total provocation of Chinese. Now, so why, if you imagine that this is, I'm not saying this is not a conspiracy theory. Imagine this is not a coincidence. How can we explain it? I'll tell you, it's very simple. Pelosi knows that China will have to react to her visit to Taiwan. She also knows that if China were to react strongly, it will make it much easier for her to push through the Taiwan Policy Act through Congress. Okay. Listen, I don't share Pelosi's politics, but I do not underestimate her when it comes to knowing how to basically, create the political conditions to get a bill passed. On that, she is a master of the craft. That's why she survived so long as the speaker. My point here is that is the ultimate aim here. I think the Americans have decided they want to pick a fight with China. Okay? That China's gotten too big for his pants. Okay? The U.S. will need an excuse. Okay? Now, U.S., just like U.S. wanted to go after Russia, and they found Ukraine as an excuse, because Ukraine has been a political football between U.S. and Russia for the last 12 years, since 2012, by the way, when basically Putin accused, Hillary Clinton, for trying to interfere with the elections in Ukraine, not to mention Russia for that matter, okay? My point here is that, every country the U.S. need an excuse to go after Russia in a big way, and Ukraine provided that excuse perfectly, and now is trying to find an excuse in Taiwan to go after China. Now, I do think, and what's also interesting is this, there are other signs that the U.S. is gearing up, okay, to basically go to war with China possibly. I'll tell you why. And this is another coincidence. You tell me if this is another coincidence. Just last week, the U.S. Congress passed a $280 billion chips and science bill, okay, that was signed into law by the president, right? That literally is going to be writing checks to companies like Intel to basically create chips manufacturing, basically capabilities on U.S. soil. Okay. Now, it's actually funny if you think about this, right? Because we know that, the crown jewel of the Taiwanese economy basically is semiconductor industry, right? I mean, Taiwan accounts for 90% of the market share of the high-tech chips produced in the world that go into phones, cars, you name it. Okay. Now, I can tell you, okay, talking to Pentagon people in the past, there was definitely a lot of wariness in Washington about a conflict between China and Taiwan that could create a sudden shortage of these chips that will deprive Americans of their new phones, new TVs, and new cars. In my view, this $280 billion bill, to a great extent, is designed, ironically, to reduce U.S. dependence on Taiwanese-produced chips, so as to allow the U.S. a freer hand to pursue a much more confrontational policy vis-a-vis China. Okay. So you tell me what the Taiwanese are going to get out of this, right? Because in the best scenario for the Taiwanese, okay, they're going to lose out the crown jewel of their economy to the U.S., the chip industry. In the worst scenario, the U.S. is going to provoke a war with China that will be fought mainly in Taiwan, that will be devastating for Taiwanese and for the Taiwanese economy. So again, we have to realize what is really going on here. So in the past, if this was going on, if this happened 3 years ago under Trump, Nancy Pelosi, let's say she had been, speaker, if she got up to basically like Taiwan for whatever, I would say, if the market had basically sold off on that, I would say buy. Okay? Because Trump understood what was in the U.S. best interest. Okay? Because Trump doesn't have a bee in his bonnet when it comes to promoting democracy, because Trump was not a hypocrite. Okay? But with this administration, right now, I'm much more inclined to sell than to buy. Okay? Because I think we're looking at potentially a slippery slope here, because there's no doubt China will have to react.
If we look at the perception of these events, first of all in China, but secondly in Taiwan as well, what is the reaction that you expect from the Chinese authorities to this line of event?
Listen, the Chinese are very simple. I mean, I think at this point it's very simple. At the end of the day, this is going to be the focus. Who cares about Pelosi's trip? Okay. The much more important thing is going to be the Taiwan Policy Act, which I told you is now basically in Congress. Okay. It's going to be voted on today, in fact. Okay. In the Foreign Relations Act. China will be very wary that this act, if passed, essentially will be a path towards Taiwanese independence. That it will be a path for the US to eventually recognize Taiwanese independence. So China, from that point of view, cannot afford to sit and do nothing, okay, given what is going on. However, the Chinese are also pretty smart, right? I mean, because at the end of the day, think about this, right? I mean, it's actually funny because, the market was celebrating today that the Chinese did not go in there and shoot down basically, Pelosi's plane, okay? Or didn't send out fighter jets to basically, intercept our planes, right? So you say, well, maybe the Chinese were bluffing after all. But let's think about this. Let's just imagine, one of the great tools, that I always fall back on when I think about this type of situation is game theory. Right? If we think in game theory, the terms in game theory, which is about the analysis of strategic interaction between multiple players. Okay, what basically game theory will tell me right now is that China understands, that if it were to invade Taiwan tomorrow, it would basically, literally start World War III. Okay. You start something like that when you absolutely have no choice. I don't think we're quite there at that moment. But there is no question China will have to do something because they realize if they don't do anything, you know what? Things are going to get worse and then they're going to lose the advantage of being able to act first. So what are they waiting for? Okay. If you're Xi Jinping, for example. I think they're just waiting for one thing. They want to see how the Russia-Ukraine war plays out. Okay. There is no doubt Putin is basically kicking Zelensky's ass in a very big way. Okay. It's pretty amazing. Every day I read American propaganda, European propaganda about how Zelensky can still win, that how he's going to basically reconquer Ukraine. You know what? That's something else I learned in 2022, which is that the West, has outplayed the Russians in this war propaganda. It's pretty amazing, okay? And by West, I mean US and British especially, But the point here is this, you know what? China wants to see, okay, because in some sense, there is a proxy war being fought, in Ukraine. You know what? Let's see, what would the US do, okay, if the situation gets more dire? By the way, again, the same Thomas Friedman, wrote an article in the New York Times 2 days ago in which he hinted that the White House is starting to not trust Zelensky. And that is fascinating. Because let me tell you something about this, Andreas. Americans love underdogs, but Americans, at the end of the day, only back goddamn winners. That's the reality of America. If you are a loser, you are nobody in America. Okay? Americans support underdog only if they win. If Zelensky cannot win, he is useless to the Americans. He will be a liability to Biden. Okay? Now, let me tell you something else. That's why sports is such a big deal. For America, it's all about winning. You're a European, you should understand that. That's why America's ahead of you guys. But the point here is this, okay? Zelensky is getting his ass kicked, okay, in Eastern Ukraine, okay? His last opportunity now is to basically recapture Kherson, right? He's now basically amassed his troops, okay, basically around Kherson, and they have destroyed a few bridges crossing into the Dnieper River. And the whole idea is that they're going to try to basically deprive the Russians, okay, that are in Kherson, basically in terms of supply, okay, from east of the river. Now, I can tell you, Russia, meanwhile, is sending enforcement into basically Kherson. Okay. In fact, Russia looks like it's about to initiate a major advance, okay, towards Odessa. This is going to be fascinating because if Zelensky loses, okay, if he loses, if his counteroffensive doesn't work, if he's pushed back, I think that will be the beginning of the end in terms of the Western support for Ukraine. And then at that point, Biden will have to decide what he's going to do. is going to continue to throw good money after bad. This is important because the Chinese will be watching this. Because Ukraine will tell the Chinese exactly how much stamina the Americans have in a punch-up between US and China. Also, if Russia wins in Ukraine, listen, there is no doubt it will probably cement China's basically determination to create a really powerful alliance with Russia. Okay. And this is very, very important because I've always said, you know what? Trump, for 4 years, Trump always understood, you know what? The last thing you want to do, right? America has two enemies. There's Russia and there's basically China. Trump always understood if somehow these two players were to get together, then America is going to be in deep shit. This is the reason why whenever, Trump saw Xi Jinping, he always said, oh, wow, Xi Jinping is a great man. He's my best friend. That's why whenever Trump saw, Vladimir Putin, he always say, oh, Putin is a great man. I admire him. This is the reason why I think, China and Russia waited until after the Trump presidency before they formalized their strategic partnership. Okay. Now, Biden has been in power for less than 2 years. Now he has basically pushed China and Russia together, okay, in a way that these two countries have never felt this way about each other for the last 60 years, since Stalin and Mao Zedong. Even then, I would argue that China and basically Russia were not that close. The point here is this. What the West has yet to fully internalize is this. China and Russia, you know what? There's synergy. China is a major manufacturing powerhouse. Russia doesn't have that much manufacturing to speak of, but Russia has massive amount of resources, which China needs. So you're talking about two countries. It's like a marriage made in heaven. Russia is strong in basic sciences. China is very strong in engineering. Okay. You think that, these two countries, if they join forces, they wouldn't be able to develop a viable, basically, civilian aircraft industry that could give basically Boeing and Airbus run for its money? Okay. You think that basically China and Russia, which are now ahead of the US by at least 3 years in terms of developing hypersonic missiles, you think that these guys are not going to be able to eventually, but especially working together, catch up with the US in technology and so on and so forth? Let's not kid ourselves. Okay. So from that point of view, this is the most important thing, which is that, until throughout the Russian-Ukraine war so far, China simply hasn't participated in the sanctions. But China has not basically breached the sanctions by selling high-tech stuff, semiconductors, whatever, to Russia, right? China has been playing by the ball. In fact, actually, if you look at Russian import numbers from China, it's also fallen, presumably because China did not want to get into trouble with the US. But now with the US on the offensive vis-a-vis China, you're going to have to think, if you're Xi Jinping, you're going to think twice. If you've decided that's it, you know what? It's impossible to find a middle ground with the US, and the US now wants my head, wants to basically go after Taiwan, then China will have no choice but to basically, cross that bridge and basically and make Russia great, So I think from that point of view, and so I think this is where it's going to come in, because I would say probably before the end of August, we will know how the situation in Ukraine is going to play out. My view is that by the end of August, I think Donetsk will fall under Russian control, much like Luhansk already has. I think by the end of August, the Russians would have pushed back Zelensky from basically Kherson and might actually even move forward towards Odessa. If that's the situation, I would argue that's when the Chinese act. Okay. And this is also the reason why I do think that all this market rally over the last few weeks is all completely unjustified. Okay. Not to mention the fact I think the market doesn't understand the US inflation story. The market does not understand just how far behind the curve the Federal Reserve is. The market has no idea that the Fed is dreaming In fact, the Powell was dreaming when he was talking about the U.S. already at neutral Fed funds rate. We are nowhere close to the neutral Fed funds rate. So from that point of view, if you think about stocks, especially, and most of your guys are basically stock investors. I mean, stocks and U.S. bond yields have like a what, minus, like, it's got right now, it's got like a minus 75% correlation. Bond yields went down, stocks went up over the last basically month, okay, since basically the end of June. But let me tell you this, I think to think that bond yield is going to be going much lower, I think is unlikely to happen. In fact, if anything, I think as we head into the fourth quarter, you'll be seeing rise. You will see, I do believe, by the way, I do think that inflation on a quarter-on-quarter basis will moderate in Q3. But I think Q4 is going to reaccelerate once the whole food and, basically energy price deceleration basically drops out of data. We're talking about quarter-on-quarter data, okay, which is what the Fed cares about. And with wages growing at 7.1%, which is the highest in 40 years, anybody who thinks the Fed is going to stop basically at year end at whatever 3% and is going to start cutting rates next year, they absolutely have no idea how monetary policy works. That could only happen if there's if we're in World War III with China. But in that case, stocks will be even lower. So from that point of view, I think investors need to realize that right now, notwithstanding what appears to be newfound momentum, especially for tech stocks, I would argue this is an environment actually you want to be looking to actually sell rather than to buy.
But David, given your assumptions here, we could actually expect action from China within, say, a month or two from now, leading to a new sell-off in equities as a consequence of that renewed action, paired with even tighter financial policies from the Federal Reserve. But I wanted to play the devil's advocate and take the stance of the Chinese administration in the current environment. We know that they have an ongoing issue with the real estate market locally in China. Do you think that the Chinese authorities could actually find a little crisis with the U.S. Coming in handy, given the internal issues that they're faced with?
It's very interesting. Everybody's talking about this property collapse in China, this real estate crisis. I think what we need to realize is that this crisis is a manufacturer crisis. And I'll tell you why it's what I mean by a manufacturer crisis. Okay. Now, we all know that Xi Jinping is seeking his third term, okay, this fall, okay? Now, I can tell you, over the last 20 years, okay, by the way, Chinese president typically serves 10 years, 2 5-year terms, okay? Usually in the second term of any president in the last 20 years, it's they'll start to stimulate the economy, they'll just basically drive up home prices, whatever, because they want to be remembered, okay, for the good times, okay? This is the reason why, a little bit like the U.S., even though, Chinese presidents are not democratically elected, but because they have this kind of 10-year, basically tenure, much like U.S. presidents got an 8-year tenure if they win 2 terms, basically there's an incentive to sort of say, well, listen, there's the saying in French, right? Après-moi le déluge. After me, I don't care if there's going to be a flood, okay? Now, Xi Jinping cannot do that, right? I mean, the guy is seeking a third term, maybe a fourth term, maybe he's going to be president for life in China, which means he actually cares about the longer term, okay, implications of what he does today. Now, think about this. If you were Xi Jinping over the last, 24 months, what would have been really on your mind? Sort of, you want to basically say you want to do something that will be good for the long term for China. You want people to appreciate the fact that you're the guy who's going to get an extra term because you're prepared to do what's not so popular. You're willing to basically make the country swallow a poison pill or a bitter pill for its own good sake. I say there would have been 2 things. One was that Xi Jinping had to go after the Chinese tech companies, right? Because Alibaba had become basically, literally like an unregulated, okay, financial, shadow financial institution, okay, that was taking a lot of risk, okay, that was not, and that risk was not being internalized, okay, in terms of prices, okay. As a result, banks were losing market share to basically Alibaba, that again, that was engaging in, essentially regulatory arbitrage. And then Alibaba want to go IPO, like this ant thing. I mean, that's crazy. This is why the Chinese decided to come down and take down, Jack Ma, which was the right thing to do. I mean, I worked in financial restructuring for many years at the IMF. I can tell you that would have been what I would do. By the way, what the Chinese have done to the tech companies in China is what basically Biden would like to do to basically Google, Amazon, Facebook, and all of those, because they're also monopolies. And in the Chinese situation, it's easier for them to act because they don't need to get congressional support and so on and so forth. They're just going to say, you know what, you're done. That's it. Okay. So I think from that point of view, what you need to understand is that basically when Xi Jinping declared war on the Chinese tech companies, he was declaring war on a bunch of monopolies who basically were stifling innovation of smaller companies on one hand. On the other, the companies that have become basically, systemic risk to the financial system because they were all becoming basically pseudo banks, okay, except unregulated. So that was the one thing he did in order to safeguard China's financial stability. The second thing he had to do something about, obviously, was this massively overvalued housing market. Right? I mean, everybody knows. Like, China has this massively over housing market. And this massively over housing market was creating one serious problem, actually two serious problems. The first, obviously, is income inequality, right? So there's no doubt, like, in China, between someone who owns a property, let alone multiple properties, versus someone who doesn't own any property at all, the wealth gap has just been growing humongously over the last 10 years. That is not sustainable. The second thing, of course, is that, which is even more pertinent, which is more worrying for Xi Jinping, which is the fact that, guess what? As housing costs become more and more expensive, people are having fewer and fewer babies. 5 years ago, China got rid of the one-child policy. Okay. And then basically 2 years ago, they actually said, you can now have 3 children. Except, guess what? People are actually having fewer and fewer children. I mean, the birth rate in China is basically, it's actually ludicrously low, just around 1% right now, which is crazy. So imagine that birth rate in China is now lower now than it was before they had basically, before they got rid of the one-child policy. So therefore, Xi Jinping had to basically bring down home prices, okay, if Chinese economy is to have any future at all. This is why he decided to crack down on housing. So if the housing is slowing, it's not because, housing market's crashing because whatever reason, like 2008 in U.S., subprime mortgage, whatever it is. In the case of China, basically the directive from Beijing is said, local governments, no more basic easy money for these developers. That's it. Which also means, Andrea, if they want to turn the tap back on tomorrow, it'd be done overnight, what I'm saying. This crisis will be over tomorrow. Okay, they can just come in and build out all the developers. That would be it. That would be the end of the story. You won't even hear about this anymore. You'd be like, in Shanghai, the Chinese stock market would be up 30%. What I'm saying is that let's understand. There are two kinds of crises. There is a good crisis and there's a bad crisis. A bad crisis is like the post-Lehman crisis that was systemic, that was out of control, and that would just basically brought down the whole world economy. The crises in China, I would argue, they're good crises to the extent that they're manufactured crises. They are crises that are manufactured in order to solve longer-term problems, which means they can end these crises just as quickly as they started them. And if China were to decide to basically do something about Taiwan, okay, in order to respond to provocation from the U.S., I think you're going to have to assume they'll end these crises. Okay. So that will be another sign, actually, to see that China, abandoning course in terms of trying to bring down house prices could basically potentially mean they're going to now, basically getting ready to go to war.
So, I mean, the Chinese real estate sector is probably the biggest single asset class worldwide if you take it at face value currently. But your point is that given that the crisis is manufactured, it can actually be solved overnight. And it is a good idea to bring house prices down as a consequence of the horrible demographic projections that China is faced with. That brings me to another really interesting topic when it comes to the Chinese economy and the interlinks to the Western economy, because we've essentially made China the factory of the world. We've made our supply chains dependent on Chinese factories, etc. Given the demographic projections that you just mentioned, with a shrinking labor force as a consequence, would you expect China to remain the factory of the world in 2-3 decades from now?
I think, first of all, yes, China, the population will be shrinking very soon. And by the way, Chinese population is aging. But there's still about 150 million, basically, surplus workers sitting in Chinese countryside, okay, that are waiting for the first opportunity to move to the coastal area and start working in a factory. So from that point of view, 150 million people is a lot of people. It's half of the United States, practically. It's about the size of the whole. It's basically France, Italy, and UK together. It's 150 million people. That's what we're talking about here. So I think from that point of view, I don't know. Yes, I think from a longer perspective, this is going to be an issue. There's going to be an issue about how you're actually going to pay for the retirement of all these basically people who are now, reaching the age of 65. But I do think that the Chinese are ahead of the game to some extent. I mean, I don't tell you. China today, this is the reason why 5 years ago, China bought, the biggest robot companies in Germany, Hika, okay? China has been deploying more robots per capita than anywhere else in the world, by the way, precisely for that reason. And this is why actually the automation is the new game in town, okay? And this is where, by the way, Europe is completely behind the curve, by the way. So if you look at in the realm of robotics, they're the Japanese, okay? Because they were the first, Japan was the first country to start to get older and older. So they were the first to basically, automate their factories and deploy robots. China is now playing catch up. Okay. And I think, this is where it gets very interesting because China now, there was a study that was published by Harvard University only a few months ago in which they claimed that in the realm of AI, China is probably already ahead of the US. And robotics, so much of it is about AI. Okay. So I would argue that there's no question that, I'm not that worried. Who cares? 20, 30 years down the road, I'll be dead. As John Maynard Keynes said, we'll all be dead. I think the question right now for investors, what's going to happen next week or the month after that? That's my horizon right now. And right now, I don't see much good coming out of the next couple of months for lots of different reasons.
We know that China is basically instrumental for the global supply chain. We've seen how the zero COVID policy has wreaked havoc with the supply chain a couple of times already during the past couple of years. Should we see an escalation in the Strait of Taiwan, would you expect that to worsen the situation for supply chains?
Yeah, it will be a disaster. Because even though the U.S. just basically passed a $250 billion bill to basically build its own semiconductor manufacturing capability, that's going to take years. Okay. Meanwhile, the whole Taiwan, basic production could be potentially shut off from the global market, right? Basically, you're talking about, because even more likely than an invasion will be like a naval blockade. Okay. China, by the way, that's going to the largest navy now, okay, in the world, I think. Okay. They can literally surround Taiwan, the island, with basically with ships. Okay. And then, so I think from that point of view, this is going to be a very serious thing. So if you're talking, this is why, if you think about this more generally, there is war. The worst situation is obviously war. War is highly inflationary, right? From the point of view, it will be a massive disruption to supply chain, whether it's China or Taiwan or anywhere else for that matter. But even if there's no war, right? What really is going to be happening, okay, the next 10 years in terms of what the Cold War between US and China, US and Russia really mean is that we're going to see two of everything. You're going to see two supply chains, two payment system, two technological architecture. We're going to have to need two of everything. And 2 is more expensive than 1, okay? And by the way, it's not just going to be U.S. and Russia building a separate supply chain. You know what? The reality is, this again, the West is in complete denial of the fact that India, South Africa, Brazil, Saudi Arabia, Indonesia, these countries are actually on Russia's side, okay? These countries do not want to see the West succeed in terms of the economic wars that they've declared on Russia, because they realize fully, if the Americans are successful with Russia, they're going to be next. So from that point of view, the smart countries are the ones who are going to be at least straddling between both sides. The dumbest countries, obviously the European countries, because the European countries, because they don't have the guts to tell no to the Americans, they're the ones who are committing total economic suicide. I feel sorry for the Germans, because Germany is going to be the single biggest loser out of this whole situation. Okay. It's actually shocking to me, because you know what? The Germans have gone so far that the Social Democrats now want to expel Gerhard Schroeders from the party. This is the man who thought that the only way for Germany to stay competitive was to basically form some kind of economic synergy with Russia, so that Germany has expensive labor, but will be able to take advantage of Russia's, basically cheap energy to transform the Germany into a greener economy that will make it competitive. That certainly was the vision that, Merkel inherited. But now suddenly the whole thing's off, okay? And then the honest truth, what the Europeans don't understand, is that the Americans don't give a shit about Europe. Because from an American standpoint, it's like, well, listen, who cares about what happened in Russia? It's like, well, Russia, the war is far away from the US, right? US has no trade with Russia. US doesn't even import any energy from Russia. So far, Europeans have gotten the short end of the stick here. That's why, I think the biggest loser here will be clearly Europe. And I think, and the question now, to me, more so than anything else, is when will the Europeans get the wake-up call?
Being born and raised right in the middle of Europe, I perfectly agree with your assessment of who's going to be the biggest loser of all this mess. It will be Germany and surrounding countries, sadly so. So it's sad news to listen to this, living just north of Germany currently. I wanted to ask you ultimately, David, given the scenario that you've depicted for China in the current environment, and the potential for an escalation surrounding Taiwan, would you consider Chinese assets investable, seen from US or European soil in this environment?
I personally wouldn't. And I think it's very simple. For one thing, listen, why do you think Alibaba is now applying to basically move its primary listing from New York to Hong Kong? That's part of the separation. Because right now, like I'm telling you, if a conflict breaks out over Taiwan, you're going to have to assume that the US will, basically try what they did to Russia on China. Okay. I mean, China won't have access to their reserves. Okay. Chinese stocks will be immediately delisted. US ETFs that are investing in Chinese stocks will stop trading, which is what just happened to US. Just think about this. Actually, it's quite dumb if you think about this, right? I mean, the American policy vis-a-vis these things are really dumb versus Russia, right? I mean, it's like, you know what? US, who do you think invests in ETFs listed in the US that are invested in Russian stocks? They're not the Russians. They're Americans. Okay, so they just screw over the Americans. Okay, who's basically like holding these bonds issued by the Russians, right? The Americans for the most part. And then, you know what? And the Americans won't allow the Russians to pay interest on these bonds held by Americans. Talking about shooting yourself in the foot. Now, I can only imagine that, you know what? If that's what they did to Russia, probably they're going to go with the same playbook against basically China if push comes to shove. So I think from that point of view, it's difficult to see. I mean, I don't think there's going to be a place to hide, by the way. Maybe the Japanese yen will be the best performing assets in the world. Okay. But it's difficult for me to see any place to hide. I mean, listen, we're not talking about, I'm not sitting here telling you, oh, there's like a 90% chance it's going to happen. I'm not even telling you there's a 50% chance it's going to happen. Okay. But even there's a 5% chance it's going to happen, okay, that probability is much, much, much too high for the market to be trading where it's trading right now. Okay.
Hmm.
That is a fact because China is like economically, it's like 20 times more important than the Russian economy. So you got to basically imagine now Russia multiplied by 20 in terms of the effect if China and Russia and the US were to go at each other. I think that's what you're talking about here.
Hmm. David, one of the core sanctions against Russia was the sanction imposed on the Russian central bank and the FX reserves, basically allowing the West to take control of at least parts of the international FX reserves of the Russian central bank. I would assume that the Chinese saw the headlines of those sanctions and started planning for a potential future without dollars in the FX reserves. Should we envisage an escalation in Taiwan? Would that be an event to sell or buy the dollar on?
I think, unfortunately, you know what? The truth is, so China's sitting on $1 trillion of US Treasuries, right? So what are you going to do? They go into what? What currency are you going to buy? Right now, it's like, well, Russian reserves in Europe. They cannot access it. The pound is not going to save you. The Australian dollar is not going to help you. The Japanese yen is not going to help you. Okay? China still runs a current account surplus. So what? You're going to hold some ruble and whatever it is. So right now, it's like, well, if in the event of a war type situation, total sanctions, I mean, there is like, it's not like China has any place where they can diversify away from what into what. Not clear to me at all, right? Maybe commodities. Maybe they should start hoarding commodities even more, right? Because that's what they can buy with their existing reserves to basically build up a lot of commodities before something would happen, okay? But again, you got to have a place to basically keep these commodities, all right? You have to store them somewhere. And so I think from that point of view, this is why, it's a sort of like, it's pretty amazing, Andrea, if you think about this, we've been having this conversation, right? Because and a year ago, if we were having this conversation, people would have thought like, you're completely crazy, you should be committed to a goddamn insane asylum. But the very fact we're even having this conversation is scary. It just tells you that we're living in a completely different world. And yet, if you look at the stock market, the bond market, they're still trading as though nothing happened. If you look at, 5-year inflation, five-year U.S. inflation break even is at 2.5%. Okay, real yields, 10-year real yields is trading at 0 right now. Okay, real rates are very, very low, as though that there's going to be infinite and unlimited demand for U.S. Treasuries going forward. U.S. basically equity valuation, same in Europe, still trading at basically the highest levels since the dot-com bubble. So if you look across the market, I would argue the market doesn't understand the world has changed. The market doesn't want to think about these longer-term issues, okay? Yeah, I realize that the earnings season so far has been pretty good, right? And by the way, the earnings season, the fact it's been pretty good overall, tells me that we are not, that we're not in a recession. I was the first one to say there was going to be a recession in the U.S. before Thanksgiving. I said this already back in basically March. By my view, the recession's already ended. The recession started in Q1, continued Q2, but it's already ended. I think Q3, the economy is going to do okay, because the price shock, associated with energy and food, would have dissipated in Q3, which means the moderation of inflation, which means you're going to actually see a pickup in real GDP growth, because you're going to see actually a pickup in real, basically, income growth. But that would only strengthen the need for the Fed to keep going. So that's why for me, Q4 is when the reckoning is really going to come. Because Q4, you're going to see that the Fed is not stopping. By the way, just think about this again. I mean, if you look at basically 10-year treasuries, right? I mean, went down to 2.5% and bounced off nicely. Because you know what? It's very simple. Right now, Fed funds rate is already at 225, right? Between 225 and 250. The good chances are Fed could hike 50 basis points or even 75 basis points. If they hike 50 basis points, I would argue there's no way 10-year Treasury yield is going to be below 275. If they're basically hike 75, I'm telling you, we're going to go to 325. So from that point of view, the market has gotten completely way ahead of itself in that sense, pricing in 5 cuts. And this is why, what the market is pricing is like recession that started in Q1, Q2 is going to continue now. And the Fed will be cutting rates very quickly. And I think that is just absolutely ridiculous because the market continues to look at the economy from the rear window. And I think the fact that the earnings actually are decent, to me, is bad news as opposed to good news. Bad news to the extent it's just going to put more pressure on the Fed to keep going.
I mean, David, I agree with your sentiment surrounding the Federal Reserve, at least very short term. I think they will need to do more than what is priced in. And I guess it's pretty simple bond math. If they keep going, unless the curve inverts like crazy, they will have to bring up the far end of the yield curve as well. David, it's been such a pleasure to interview you surrounding the developments in Taiwan and the interlinks to the economy in Europe and in the U.S. We may be in for a rude awakening in the fourth quarter if you are right, but we should also watch the developments in the Strait of Taiwan over the course of August. Any last thoughts that you want to leave our viewers with?
I think for the viewers, by the way, I just want to say, I have to basically promote my channel a bit. I've got a free YouTube channel, David Wu Unbound. If you want to follow me on a weekly basis, I also have my own blog, davidwuunbound.com, where I manage 3 different portfolios because I really do believe, having left Wall Street, I've decided that, it's easy to talk the talk. These days, I just want to walk the walk. So from that point of view, there are a lot of talking heads in the world right now. And if you're looking for someone who wants to be accountable for his calls, come check me out. So I'm here talking about long-term views, but every week I rebalance my portfolios. So I do think that this is an environment in which buy to hold investing just doesn't work. You got to be basically nimble. You got to basically, think long-term, but trade short-term. And that's the way to go. And I'm not saying that's easy. It's extremely, extremely difficult. But I think at least that's what I'm basically promoting right now.
David Wu, the founder of David Wu Unbound. Thanks so much for joining the Real Vision interview. It was a pleasure to host you.
Thank you, Andreas. Thank you.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.